All right. Hello, everyone. Uh, One of the things that we do over here at Stock Market Jobber is teach people how to teach themselves. You don't need to rely on all these gurus or these pundits or experts that are always wrong or typically wrong. Although, you know what? If they're wrong enough, they're a contrarian indicator, right? If so and so always says, oh, buy this, and they're always wrong, hey, then you just do the opposite. But anyway, Stock Market Jobber is an educational website. And there are things that we can look at and we can teach ourselves. And I'm confident I've been doing this for 25 years and it's not as complicated as you think. But anyway, just getting into it, let's look at this, right? This is the Institute for Supply Management, some kind of like government thing. I don't know. Used to be called the Managers Index. So these guys put out these reports once a month and they're free. And we're going to go to their reports and we're going to go to ISM reports on business. Now, most of this is free. I'm sure they got really cool stuff here you can pay for. But the good thing about this is they're not selling an opinion. It's just information. They're not trying to say we're right or we're wrong. Now, 2 years ago, it was so obvious that there was inflation that a bunch of my students over at the Benzinga Trading School made a lot of money while everyone else is complaining, oh, inflation is going up. What are we going to do? Well, if the markets are moving, if you're a trader, you can make money. You just need to know how to. And I'm not saying about knowing whether it's going to go up or down, but just take a look at this. This is an ETF that basically tracks inflation. It's the Invesco DB Commodity Tracking Fund. All right. Now, it seems so long ago now because it's almost 2 years ago, but back in early 2022 was inflation, inflation, inflation. Look at this. Say you bought this ETF here, sold it up here, you would have made 50% of your money and you could have bought options. You could have done even better. This ETF is designed to track a basket of commodities. Commodities track inflation. If inflation is going up, it sucks in our everyday lives, but you can make money in investing in it. It could almost be a hedge. All right, hey, I got to spend X amount more to like support my family and my kids. Well, I'm going to throw some money into this ETF. And the perfect hedge is the more I got to spend on my kids and my family. If this goes up the exact same amount, it's a break even. So, anyway, this was back then. Now, this is this report that comes out once a month, ISM, Institute for Supply Management. We're going to go look at the manufacturing report. Now, back in October, November, 2 years ago, it was so obvious that there was inflation because we would look at this commodities up in price, commodities down in price. There was not a single commodity down in price. Every commodity these guys followed was up in price. And I'm talking there's like 80 or 100 of them. So I don't know what Janet Yellen, maybe she's taking too many shrooms over there in China or what's his face, Powell's looking at. But it was so obvious that there was inflation. So anyway, this is one of the things we look at. Now, anything below 50 is contraction. The manufacturing purchasing managers price index is at 46.7. This is a low reading. Anything below 50 shows contraction. So we can argue, all right, the economy's in recession, economy's not in recession, blah, 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 blah. Anything below 50 is contraction. The PMI is showing contraction. Inventories, these are important. New orders. So this part of the economy is definitely slow. Now, these guys also look at other parts of the economy. Hospital is so new. I don't even really look at it. And it's almost kind of sad. It's like, all right, well, hey, the economy is expanding because people are getting older and living longer. And we got to spend money in the hospital. But there's a service is a PMI. And this is relatively new too. I mean, I don't mean new. It's been around for like 5 years. It used to be just the PMI. So same thing. Services PMI 51.8. So remember, anything below 50 is a contraction. And it's 51.8. Last month it was 53.6. It's slowing down. If manufacturing, I highly doubt it's going to come back and be above 50. It's on its way down. This is slowing down. This gets below 50 next month or two, then it's just proof that the economy's in recession. Now, what is a recession? Well, hey, it's like the old saying. It's a recession when your neighbor loses their job. It's a depression when you lose your job. So I'm not saying the economy is going into utter catastrophe unless there's like a asteroid or something like that. But anyway, just something to look at. We look at this every month at stockmarketjobber.com. It's a free site. If you're kind of an economics geek, you can get a lot of, or an investment geek, you can just get a lot of different things on here for free, right? They got their magazine, they got this, they got that. Okay, everybody, thank you so much. I will see you soon. And until then, I hope you have some happy trading.